Good morning. Today's topic is the C-Corp Solo 401k setup deadline for a mega backdoor Roth strategy inside a solo 401k plan for tax year 2025. With just the right solo 401k setup, the correct plan documents, the right contribution buckets, and the right timing, you could move up to $70,000 for tax year 2025, or even more if your spouse is also a participant in the plan, into the Roth Solo 401k side, tax free, using the voluntary after tax Solo 401k as part of the Mega Backdoor Roth. So we're going to unpack this today. We're going to unpack the setup deadline for a business tax as a C corporation for utilizing the Mega Backdoor Roth for tax year 2025. Just so you know, we've already done a few webinars on other entity types, such as the sole proprietorship, S corporation, and partnership. And you can view those past webinars on our YouTube channel. So those other ones were also based on the Mega Backdoor Roth Solo 401k setup deadline for tax year 2025. So, as always, this is your chance to get answers. Use the chat to ask questions on today's topic or anything else for that matter. Type them over now so that we can be sure to get to them all. Let's continue here. So, of course, before anyone can open a solo 401k plan, you have to be eligible. A solo 401k is for owner-only businesses that do not employ any non-owner full-time W-2 employees. So in the context of a C corporation, even an S corporation, you have to be a W-2 employee and you have to be an owner. There's a spousal exception when your spouse doesn't have to be an owner in your S corp or C corp. He or she just needs to work in your business as a W-2, and therefore you can both participate in the same plan. You can, however, your S corp or your C corporation, for that matter, cannot hire a W-2 employee who is a non-owner and works 1,000 hours or more. If you do employ someone who is not an owner in your business and is also a W-2 employee, so a common law employee, and he or she works 1,000 hours or more, you would not be able to open a solo 401k plan. And you typically have to apply that test across all of the businesses that you own. So you may own multiple self-employed businesses, or you may own another business that has full-time W-2 employees. As a result, you most likely would not qualify to open a solo 401k plan, but there are certain tests under the control group regulations and the affiliated service group regulations that would have to be determined. But you can always exclude anyone who's under age 21, regardless of how many hours he or she works in the business. So if you employ a W-2 employee in your business who's not an owner, and that individual is under age 21, it doesn't matter if that individual works under 1,000 hours or over 1,000 hours. You can always exclude anyone who's under age 21 from participating in any type of 401k, whether it's a traditional full-time employer 401k to a self-employed solo 401k plan. The IRS also refers to solo 401k plans as single Ks, unit Ks, owner-only solo 401k. They all mean the same thing. It's a self-employed plan, specifically 401k, aka solo 401k, for owner-only businesses that do not employ any non-owner full-time W-2 employees from an eligibility perspective. There are also ongoing requirements, but we're not going to talk about that right now. We have covered that topic in past webinars. So again, you want to make sure you're eligible to open a solo 401k plan before you can even think about utilizing the Mega Backdoor Roth strategy for your self-employed C corporation, for instance. So if you got a question here, we'll get to that question in a moment here. Again, go ahead and type over your questions. They don't have to be about today's topic. They can be regarding any topic surrounding solo 401ks or even self-directed IRAs. We're well versed on all those regulations. So why does C Corp why does your self-employed C corporation need to open a solo 401k plan by December 31st of 2025? Well, that only has to occur if you want to be able to make employee contributions for tax year 2025. If you want to make voluntary after-tax solo 401k contributions or even employer profit sharing contributions, then you do not need to open the solo 401k plan by December 31st of 2025. Yes, you heard that correctly. If you solely want to make voluntary after-tax solo 401k contributions, for example, you can wait until January 1st of 2026 and after up until the C corporation business tax return due date for tax year 2025, which would be April 15 of 2026, or it would be extended an extra 6 months to October 15 of 2026. And that would allow you to make contributions, voluntary after-tax solo 401k contributions for tax year 2025 and 2026 to the solo 401k plan. So in short, the only deadline you need to really scramble for right now is the December 31st deadline if you're looking to make employee contributions, also known as salary deferral contributions. And just to slide something in here, the mega backdoor Roth, you need to make sure that you open a plan with a solo 401k provider that provides a plan that allows for the mega backdoor Roth strategy. That's where you make voluntary after-tax solo 401k contributions up to the overall limit, which is $70,000 for tax year 2025. And then subsequently, you convert those funds to the Roth solo 401k or the Roth IRA. So again, today's webinar is based on the C Corporation critical deadlines for tax year 2025. We've performed other webinars already regarding S corporations, sole proprietorships, partnerships. If you visit our YouTube channel where we have over 1,000 webinars, you can access those. We just performed those webinars recently. So take a look at that. Also, like our YouTube channel. Helps get the word out to other solopreneurs like yourself. Please share us on social media. Help spread the word. So we've got a question here. Let's take a look at that question. How do solo 401k limits work for subchapter S corps? Again, take a look at our YouTube channel. We have a great webinar series. We've actually done a bunch on S corporations. You can find a lot of in-depth information. I pay salaries to my wife and me. My understanding is that I can contribute more to my solo 401k than my W-2 wages, as the IRS 415C limit of 70,000 does not include that. So catch-up amount gets added on top of the 70,000 to her wife. It's a true maximum. Is this correct? What would be the maximum contribution for a 55-year-old with W-2 of $35,000? Well, so corporate contributions to a solo 401k, if we're talking about an S corporation or even a C corporation for that matter, are going to be based on your W-2 wages from your business. Specifically, box one, the gross wages. That's going to be the starting figure for the calculation. If your spouse is also a participant in the plan, which means he or she is also working in the business, then he or she also needs to have a separate W-2 with box one gross wages. So if you pay yourself $35,000, you're not going to be able to contribute more than that to the solo 401k plan. In short, you cannot contribute more than you make in W-2 wages. What is more, employee contributions, employer contributions, and voluntary after-tax solo 401k contributions are all based on your W-2 wages. Oftentimes, I get questions from clients. I probably get this question every day, where the individual says, well, my business is an S corporation. I've got 50,000 of W-2 wages. I contributed the entire $50,000 as a voluntary after-tax solo 401k contribution to my solo 401k. I also want to make an employer contribution. Can I do that? The answer is no. Why? Because in that particular example, you utilize the entire 50,000 of W-2 wages towards your voluntary after-tax solo 401k contribution. So you don't have any more W-2 wages to contribute. So even though it's an employer contribution, which is it, the employer contribution is it's a percentage. It's 25% of your W-2 wages. Well, if you've already maximized all of your W-2 wages to contribute to the solo 401k, there's nothing else to contribute. So you wouldn't be able to make any catch-up contributions, any employee contributions. So in short, you have to have the necessary W-2 wages to support the contribution. If you're age 50 or older, and we'll get to this example once we get to that slide. So I'll finish answering that question in a little bit. Because again, just like an S corporation, with the C corporation, you have to have W-2 wages from that business to make all contribution types. So we'll get back to your, we'll finish answering your question about the catch-up in a little bit. Here's another question here. If I make after-tax non-Roth IRA contributions to Fidelity Solo 401k, well, number one, you cannot make any Roth IRA contributions to a solo 401k plan. You would have to make your Roth IRA contribution to your Roth IRA. What is more, you can never transfer a Roth IRA to a solo 401k. The Roth IRA regulations do not allow for a transfer of a Roth IRA to the Roth Solo 401k. You can learn more about that Roth IRA restriction under IRS publication number 590, the publication for IRAs, including Roth IRAs. Let's see the rest of your question here. Can I then do a backdoor conversion to my personal IRA? Well, no, again, you cannot transfer a Roth IRA to a solo 401k. If I already opened a Fidelity Solo 401k, can you link sub-account to the solo 401k? I don't quite understand your question there, but in short, the solo 401k does allow for various contribution types. It allows for employee contributions, employer contributions, voluntary after-tax contributions as well, for example. So let's take a look at this example here. So here's an example of a one participant plan for a solo 401k plan. So this plan here, you're going to see that this plan allows for pre-tax contributions, Roth contributions, and voluntary after-tax contributions. So it's just one solo 401k plan. You can utilize your local bank or Fidelity or Schwab to hold the funds for the solo 401k that we offer here in my solo 401k financial. And it's the My Solo 401k Financial that allows for these various contribution types, but both Fidelity and Schwab will gladly provide what they refer to as company non-prototype retirement brokerage accounts for a solo 401k offered by My Solo 401k Financial. And it's My Solo 401k Financial that handles the setup as well as the reporting for your plan upon your timely request, because we never have access to your funds. So here's an example. Let's say your C corporation sponsored a solo 401k. You're the only employee in the C corporation. The C corporation would sponsor the solo 401k plan. We would help you open up 3 separate brokerage accounts at Fidelity, also known as holding accounts. We would help you open up a pre-tax solo 401k brokerage account, a Roth solo 401k brokerage account, and a voluntary after-tax solo 401k brokerage account. And you don't have to make all these contribution types. You can make some or all. And just because you don't make those contributions doesn't mean you're not going to be able to make them in later years or a later time. All these features are already built into the plan, so you can utilize them whenever you're ready. Here's an example of a 2-participant plan where you have both spouses in the plan. So if both spouses are working under the same C corporation or S corporation, in this case C corporation, you're going to have a total of 6 holding accounts, aka brokerage accounts at Fidelity. If you want to use Fidelity, you can use Schwab, you can use your local bank, but just using Fidelity as an example, you would have a total of 6 brokerage accounts under that plan, 3 for each participant. So a pre-tax, a Roth, and a voluntary after-tax times 2 for a total of 6. So one plan, 2 participants, 6 separate holding accounts because you are required to separately track each participant's funds and fund sources. Okay, let's keep going over some more topics today. We'll come back and look at some more questions. So, again, we're talking about the Mega Backdoor Roth Solo 401k setup deadline for tax year 2025 for a C corporation. We've done other webinars on other entity types, as I mentioned earlier. So let's get back to my slides here. So we already talked about why the C Corps need to act before December 31st. In short, if you want to make employee contributions, you need to set up the plan by December 31st of 2025. However, if you want to make employer profit sharing contributions and or voluntary after-tax solo 401k contributions, you can wait until January 1st of 2026 up until April 15th of 2026, or if you file for a timely C corporation self-employed business tax return extension, you would have until October 15th of 2026 to both open and make the contributions of voluntary after-tax and employer profit sharing. However, you would not be able to make employee contributions because you have to set up the plan by December 31st, 2025, if you want to be able to make employee contributions for tax year 2025. So here's some C Corp deadlines here. So obviously you want to understand the structure for a C corporation self-employed business, including the deadlines. So as I touched on already, here's a good example. The December 31st, 2025 setup deadline applies if you want to make employee contributions to the plan for tax year 2025. Of course, if you set up the plan by December 31st of 2025, then you're going to be able to make all contribution types, employee, employer, and voluntary after-tax contributions for tax year 2025. And you can do so next year in 2026 by that C corporation tax return due date, which is April 15 of 2026 or October 15 of 2026 if you file an extension. So why procrastinate? Go ahead. Well, today's December 2nd. Go ahead and set up the plan now. That way you can have some good holidays. Of course, if you're listening to this webinar and on January 1st or after of 2026, it's good to know that yes, you may have missed the employee contribution setup deadline of December 31st of 2025. However, you can still make employer and voluntary after-tax solo 401k contributions if you set up that solo 401k plan by April 15 of 2026 or October 15 of 2026, and you're going to be able to make contributions for tax year 2025. Those are employer contributions and voluntary after-tax solo 401k contributions, but not employee contributions. So this is a good slide to refer to regarding the deadline. So as you can see, the deadlines are oftentimes determined by the contribution type. So let's continue here. Now, why December 31st matters? Well, if you missed the December 31st year 2025 deadline, as I already stated, you can still establish a solo 401k plan in 2026, but you'll be severely limited. You'll only be able to make employer profit sharing contributions and or voluntary after-tax solo 401k contributions, no employee pre-tax or employee Roth contributions, unfortunately. How easy is it to meet the December 31st deadline? It's very easy, especially if you utilize my solo 401k financial. We have an online application that you fill out. It takes no more than a minute. We ask for simple information, your name, your address, your business name, what name you want to assign to your plan, and so forth. We then draft the plan documents the same day for your signature. You can sign those documents the same day, or you can sign them later. You just need to make sure that you receive those documents from us, so that way you meet that December 31st setup deadline. So by signing the plan documents, that means that that your plan is effective. In other words, solo 401k plans are legal plan documents. A solo 401k is a retirement trust. It encompasses several types of plan documents, such as the adoption agreement, trust agreement, basic plan document, and so forth. All you need to do is sign the plan document. As soon as you sign that plan document, your plan is effective for tax year 2025. And then you can wait till next year in 2026 to both open the bank or brokerage accounts and also make contributions. Yes, you heard that right. And that applies to all contribution types: employee contributions, employer contributions, and voluntary after tax solo 401k contributions. So, in short, you simply need to sign the plan documents and your plan is effective. Then you can have a happy new year, come back next year in 2026, relaxed and fresh, and we can help you open up the bank accounts or brokerage accounts, get the EIN number for the 401k, help you calculate contributions, and you'll want to make those by your business tax return due date plus timely filed extension in 2026 for tax year 2025. And this is afforded by the IRS, and you can learn more about this in publication 560, because don't confuse other types of 401ks, traditional 401k plans. Those have more stringent requirements where you typically have to make certain contributions by year end. Well, a solo 401k does not allow for what's referred to as common law employees, another fancy way of saying employees who are not owners. So it's for owner-only businesses and their spouses. Well, with a traditional 401k, like a plan offered by Walmart, Amazon, or Nvidia, those are considered traditional plans. So contributions have to be made by December 31st. Well, not so with the solo 401k plan. All employee, all employer, all voluntary after-tax contributions can be made in 2026 for tax year 2025 by your business tax return due date plus timely filed extension. I'll probably spend a quarter of my day this time of year repeating that. Okay, let's take a look at some more questions here. If I want to move stocks from my 401k solo to my 401k Roth and pay taxes, what do I need to do if possible? Good question. So you're looking to process an end plan conversion of pre-tax solo 401k funds to the Roth solo 401k plan. A, that's going to be a taxable event. B, you typically want to do it if it's a stock that has dropped in value tremendously, because it's going to be a taxable event. So you're going to pay taxes on the market value of that stock. So if you bought a stock that took a big hit, let's say you own Tesla or CoreWeave or other types of AI stocks, and they've dropped down significantly in value, the regulations allow you to convert a stock held in the pre-tax solo 401k to the Roth solo 401k. So you don't have to convert actual dollars. It can be an asset. We have a lot of clients that invest in real estate, rental properties, and they'll convert a real estate property owned by the pre-tax solo 401k to the Roth solo 401k, and they end up paying taxes on the market value of that property. Similar with the stock. You're going to have to pay taxes on the market value of that stock when it's converted to the Roth solo 401k. So you want to make sure you convert when that stock is at a lower value. So it's going to be a taxable event. You're going to pay the taxes due on that conversion with funds outside of the plan. You cannot use solo 401k funds to pay that tax. So you want to make sure you have enough funds in your personal bank account to pay those taxes. Those taxes for conversions processed in 2025, those taxes will be due with your Form 1040 tax return by next April, unless you are required to pay quarterly estimated tax payments. Once you convert the stocks and that pre-tax solo 401k to the Roth solo 401k, and you need to do that by December 31st of 2025. So you have to make sure that stock is converted to the Roth solo 401k by December 31st of 2025 if you want it to count for this year. Then you need to complete our end plan conversion form on the forms tab of our website, the pre-tax conversion form. You're going to list the value converted so that we collect the necessary information to issue that form 1099-R. you'll want to contact, I'm not sure if you're using Fidelity or Schwab. Many of our clients use Fidelity and Schwab to hold their funds. So we do have procedures on our website. Let me see if I can dig those up right now and share those with you. In case you're using Fidelity or Schwab to hold those solo 401k funds for the plan that we offer. Give me a moment here while I dig that up. If you use Fidelity, you can call Fidelity and ask them to convert that stock over the phone. Otherwise, you can submit a form to ask them to convert it. If you use Schwab, you're going to have to fill out a form and submit it to Schwab. Give me a moment here while I dig up some links here. Okay, where's that at here? Here we go. So here's the procedure if you use Fidelity. If you use Schwab, let me dig that up for you here. To hold the funds, then again, Schwab's going to require that you fill out a form and submit it to Schwab. So you want to get going on that ASAP if you're trying to count it for tax year 2025. Here's the procedure for Schwab. And the form is also in that link. And all this information is on our website. If you go to the top right-hand corner, there's a search box. Just type in keywords and it'll bring up information for you. Okay, so I don't see any other questions right now. Go ahead and type over any questions you have, and we'll go ahead and continue to go over those here. In the meantime, let's continue with our topic for today, which is the Mega Backdoor Roth Solo 401k setup deadline for tax year 2025 for a C corporation self-employed business. We already covered that slide. So some basics is that the Mega Backdoor Roth requires making contributions to the voluntary after-tax solo 401k bucket of your solo 401k. Once you make that contribution to the voluntary after-tax solo 401k bucket, which you can make all the way up to the 415 limit, which is $70,000 for tax year 2025. Once you make it to the voluntary after-tax solo 401k bucket, you can convert it to the Roth solo 401k. Once you convert it to the Roth solo 401k, make sure to complete our M-Plan conversion form, because that's the form that we use to collect. And that form is on the tabs, on the forms tab of our website on the top right-hand corner. You can visit our forms tab and you can scroll down and you're going to find that form 1099R request form. As long as you timely request that form 1099R, we'll go ahead and issue that form 1099R, a copy sent to you and a copy filed with the IRS. And that's how you document the Mega Backdoor Roth strategy. So first, you open a solo 401k plan with a provider such as my solo 401k Financial, whose plan allows for the Mega Backdoor Roth strategy, which entails making voluntary after-tax solo 401k contributions to that designated holding account, the voluntary after-tax bank or brokerage account, and then moving it from the voluntary after-tax solo 401k brokerage account to the Roth solo 401k brokerage account, or to a Roth IRA if you prefer. And then we need to issue the form 1099R. If you timely request that, we'll issue that at no additional cost. Because remember, we don't have access to our clients' funds, so you need to make sure you communicate with us when you process a conversion or any type of distribution for that matter, so that we can perform the required reporting for you unless you have your CPA handle it. Let me get back to my applicable slide here. So again, compensation for a C corporation, self-employed business, and this also applies to an S corporation, self-employed business, it's going to be based on your W-2 wages. So you're going to use box 1, the gross wages of your W-2. you may have to add the amount in line 12A of the W-2. You may have to add that amount to box 1 so that you use the correct total value to calculate your contribution. And to finish answering a question from earlier, both spouses can contribute to the plan. Their contributions are going to be based on their respective W-2 wages. So earned income matters because you cannot make contributions to a solo 401k plan unless you have earned income from self-employment activity, which means you've been doing the work, performing material services. You cannot contribute to a solo 401k plan based on passive income, investment income, or capital gains income. It has to be earned income from self-employment activity where you did the actual work, you performed the material services. And of course, earned income is different for each self-employed entity type. For a sole proprietorship, it's going to the earned income is reported on line 31 of that Schedule C. For a partnership, it's reported on line 14, Code A of the Schedule K1. Now, using the C corporation example, if you want to make contributions to a solo 401k plan for tax year 2025, the overall contribution limit is $70,000 for someone who's under age 50. If you're age 50 or older, you can contribute an additional catch-up amount of $7,500. On the other hand, if you're age 60, 61, 62, or 63, you can make a super catch-up contribution of $11,250 instead of the $7,500 normal catch-up contribution. So for example, if someone is age 52, they can not only contribute an annual contribution limit of $70,000, but they can also make a catch-up contribution of $7,500. However, in order to contribute that additional catch-up amount, you're going to want to make sure you have enough earned income. So in this case, enough W-2 wages to support that contribution. So if you only report $70,000 of W-2 wages on that box 1 for your C corporation self-employed business or S corporation self-employed business, you're not going to be able to contribute any more than $70,000. So if you contribute $70,000, for example, as a voluntary after-tax solo 401k contribution, you're not going to be able to contribute anything else because you only paid yourself $70,000. If you want to be able to contribute that additional $7,500 catch-up, you're going to have to pay yourself at least $77,500 of W-2 wages. And then that $7,500 can be applied as an employee contribution to the Roth Solo 401k or the pre-tax Solo 401k for tax year 2025. So again, all contribution types, employee, employer, and voluntary after-tax are driven by your W-2 wages from your self-employed C corporation or S corporation. And you cannot contribute more than you make. So why do some providers out there don't support the mega backdoor Roth? Well, companies like Fidelity, Schwab, Vanguard, or even traditional banks like Chase or Wells Fargo don't support the mega backdoor Roth because it's too complicated. It takes a lot of work. You have to educate people on this strategy, number one. Number two, you have to help them perform calculations. Number three, you have to make sure it gets reported to the government. Schwab, Fidelity, and Vanguard or banks, they don't make any money of helping you do that kind of stuff. They make money off of your deposits. So they'll gladly provide bank or brokerage accounts for a solo 401k from my solo 401k financial that does allow for the mega backdoor Roth because they know that they can wash their hands and they don't have to do any of that reporting. Instead, the onus is going to fall on you in conjunction with your solo 401k provider. So as a result, here at my solo 401k financial, A, we provide such a plan that allows for the mega backdoor Roth. B, we'll perform the required reporting as long as you timely request it. So as part of our ongoing support, this is all covered on our annual fee. So our annual fee of $125 is for being a solo 401k plan provider. That's the main purpose of that fee, but we made a business decision to not charge additional fees for those who timely request reporting services, specifically for 1099-R reporting, which is part of the Mega Backdoor Roth strategy. It's also required if you take a required minimum distribution, any type of distribution from the solo 401k, you have to issue a Form 1099-R. As long as you timely request that, we'll go ahead and prepare and file that for you at no additional cost. We can also prepare and file Form 5500 Easy, an informational return, which applies once the market value of your solo 401k plan is greater than $250,000 as of year end. And that's due by 7 months after year end. So if your year end is December 31st, then the Form 5500 Easy would be due by July 31st of the following year if the market value of all your plan assets, so all of the funds in your Roth, pre-tax, voluntary after tax, all the investments, you have to add up all those amounts to determine whether or not the market value is greater than 250,000 in value. If it is, you need to let us know so that we can prepare and file that Form 5500 Easy for you. We don't have access to your funds, so you need to communicate to us. And as long as you communicate that you need assistance with those tax returns, we'll prepare those for you at no additional cost. Just make sure you do it timely. Other ongoing support we provide is helping you calculate contributions, understand the distribution rules, contribution rules, investment rules, whether it's alternative investments like real estate, precious metals, and so forth. We'll also consult on rules and regulations. Our plan comes with the auto contribution credit, which is a $1,500 credit that the government is essentially subsidizing of you having a solo 401k for many years. It's a $1,500 auto contribution credit. You don't have to contribute to the plan to qualify for it. You just need to make sure you have a plan that has the auto contribution feature built into it. You can contribute whatever amount you want up to the overall limit. In short, you don't need to make contributions to qualify for the auto contribution credit. You need to have a plan from a provider who offers a plan that allows for it. All right. Let's see if we have any other questions for now. All right, I don't see any other questions for now. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe. It helps us to get the word out to other solopreneurs like yourself. We'll be back here in a couple hours. Until then, have a good rest of the day.